day. But we've been getting a lot of big voices through the day. Through the weekend, we got a lot of big voices. We have one more big fund manager now joining us. Navneet Munot, the CIO of SBI Mutual Fund, is with us now. Navneet, good morning. Thanks for taking time out. So the market has been quite resilient.
Hi, morning.
A week back, if you had asked that the market will have to negotiate with both Brexit and global market volatility, the bulls could have been forgiven for thinking that we could see even 7,700 or 7,800. We are fine at the index level. What do you make of the current resilience, and you think that's going to continue?
So just 2 days, I think we'll have to wait and watch, first of all. But from the India's perspective, as I'm sure everybody would have talked about, that this time on a relative basis, compared to most of these episodes in history, relatively the macro fundamentals are looking better. And also that the flow of the domestic money, so last time when we had the crisis in 2013, the taper tantrum, or the Brexit before that, or the 2008, when you compare with those events, the domestic investors were also on the same side with the foreign investors. This time we are seeing the domestic flows continuing. That is also providing some cushion. And also from a macro perspective, I think India is definitely in a far better position this time compared to most of the similar episodes. But as I mentioned, that I think this is too early. This is a big event with lots of long-term repercussions, and I think we'll have to wait and watch for how the whole story unfolds over a longer period.
Okay. Mr. Munot, just extending that point about the macros, do you think that India is actually going to be a windfall gainer because of what's going to take place on the likely Brexit circumstances? Simply because, like you mentioned, we're resilient on the currency, we have forex reserves which are at all-time record highs, and over that, one of the fallouts could be lower commodity prices globally as well, and hence India would be one of the key beneficiaries of that. So net, we could see higher FII inflows by the end of this year, and we could possibly outperform all other global markets?
So historically that has never happened actually. So every time we thought that India would decouple, that didn't happen. Hopefully this time could be different. But if you contrast India with what's happening in the rest of the world, where you have these anti-trade, anti-globalization, anti-immigration voices becoming so strong, India has carried out the most impressive FDI reforms in its history in last 2 years. And it's across parties. So even at the center where you have BJP and NDA, but even a party which is, let's say, CPM getting elected in Kerala, talking about the FDI reforms and then more opening up. So that's a big contrast. Second contrast, where every central bank is cutting interest rates to negative levels, printing more money. We have positive real rates and have really strengthened the overall macro framework, the policy framework. Foreign exchange reserves, which are depleting in most of the cases, here they have been growing. So on a relative basis, I think we are better placed. But again, as I mentioned, that historically, because as someone rightly said, we are a nice house but in a bad street. So if there is a risk of all emerging markets gets outflows, we may also get impacted. We won't be completely insulated, but the dependence on foreign flows has gone down, and that's why the vulnerability on global money or on the global sentiments relatively this time is less.
Okay. Navneet, IT is down, and clearly that's the direct Brexit impact right now. What about companies exposed to the UK and European Union in particular? We can say that overall India dependence on EU is not much, but a lot of companies have quite a bit of dependence on the region.
So actually that's a immediate reaction that yes, UK economy may slow down, the currency has already depreciated, may depreciate a little more, so companies operating out of UK or having exports to UK will get badly impacted. But that's like a more linear, straightforward view. But we don't know, as I said, that this event will have lots of repercussions. Everybody is saying that a Great Britain may become a little England. I don't know. Let's wait and watch how the whole the process of negotiation goes up. Maybe a few years later, the England comes out to be, or Britain comes out to be a more open economy, a more instead of a closed economy, and some of those companies may benefit. Of course, the companies that have export or let's say the impacted by the sterling fall today. But I assume that some of those companies, their treasurers would also be aware. I assume that some of them may have hedged their positions. So I think we'll have to wait and watch.
Okay. Navneet, well, one of the things that we do know is that the US elections are coming up. Do you think that is something that the markets are going to start tracking much more closely simply because of the Brexit event and now maybe the probability of a Donald Trump not being ruled out entirely?
That's what I mentioned in the beginning. This is not a one-off event. This I think reflects some of the larger trends which are underneath. So the voices of anti-globalization, anti-trade, anti-immigration are getting louder. People have already started talking about Brexit. We don't know what are the other things that are likely to happen in EU, and as you rightly mentioned that in US also the political debate is getting quite polarized because of this event. I think in the last 30-40 years we have seen a huge benefit to the global economy from a free movement of goods, labor and capital. Definitely there are no walls getting created, but I can clearly visualize some speed breakers coming to that. Maybe there is a section of population, particularly in the Western economies, feeling that the best of the globalization benefits that could accrue to us are behind us. We are not seeing incremental benefits, and we need to probably be a little more inward looking, and we have to look at our own interest rather than what's in the global interest. So I think this is likely to last for a little longer than what anybody thinks at this point in time. And I'm sure, I mean, not only the US elections but even the political debate in some of the other parts of the world will have to be taken cognizance of by most of the investors.
Okay, Navneet, so you're sounding quite realistic. I mean, not as optimistic, as some of our earlier speakers. What's your sense? Do you think the index stays in a range and it remains a bottom-up stock pickers market, or do you get a sense that the bull market climbs wall of worries and actually at index level makes a new high? What's your prognosis on that?
So my worries on the global front, not so much on the domestic front. As I rightly mentioned that fortunately we have a huge amount of reforms. We had massive, particularly the opening up of the FDI. Put yourself in the shoes of any global company, and if you are in the boardroom and looking at the world today, should I invest in UK, should I look at EU, look at the politics and the economic situation in the US, Latin America, China, and India really looks very attractive. So we can actually be an oasis of hope. If you ask me about FDI, I think the flows will continue to surprise on upside, and that will have positive impact on the markets as well. But as I mentioned that we may be less impacted by the global movement of capital, but we will not be completely insulated. For example, few minutes back the People's Bank of China depreciated the currency by 0.9%. If they do more because they feel the heat because of what's happening after Brexit and EU, definitely I think rupee is going to get impacted. We need to be prepared for that. But thankfully we have good leadership, and I think the relatively macro is better positioned to handle those global challenges.
Okay. Navneet, is there any portfolio change that you might be considering or you've already considered in light of the developments? Maybe a more domestic focused portfolio, and the reason I ask is that we have a lot of domestic based companies which are gaining today. So from the diagnostic space such as Thyrocare to Bajaj Finserv from the insurance space, that seems to be the theme playing out. Is that something that you consider which might be completely insulated or fairly insulated?
No, obviously the domestic consumption, right from the the expectation of better monsoon, the 7th pay commission, rising incomes, I think the overall consumer space looks good. Urban consumption is clearly reviving. On the investment side, the government spending, at least on some of the sectors like roads and railways, is helping us. You mentioned about the healthcare companies which are focused on the domestic side. Cement can do well. Overall chemicals, agrochemical space. So there are several of those bright spots on the domestic side. From a global perspective, I think some of the companies in the IT and pharma have got impacted for a variety of reasons without getting too much into details. But if the stocks correct more because of what has happened in Brexit or the exposure to UK or the rest of Europe, maybe even some of those companies may become attractive at lower prices because those risks are getting into the price. And at least if the rupee depreciates, that could act as a tailwind. I mentioned that there are challenges for the world, there are challenges for the global economy, but it's not coming to an end. I'm sure some of our companies definitely can do well over a longer period.
Okay, just a word on anything that you would want to completely avoid, Navneet. We have seen so much rally in domestic companies, but valuations have run up a bit, whether it's NBFCs or some of the domestic cyclicals. Anything that you would want to avoid right now?